Jack Caffrey is here, equity portfolio manager at JP Morgan Private Bank, and our guest host is Jason Trennert. And we give you notes. So you have Caffrey's notes in here?
I have.
Do you still manage money?
Say,
you still manage money?
We manage. We're a research firm, but we do manage some.
All right, because Caffrey has. I'm going to get to what he wants. He's got some ideas here.
Right. Yeah.
So you can look at the notes you have, or you can just use your pen and take this down. So, Jack, Jason's going to be listening.
Mark it down.
Yeah, what's that, right?
So, no recession in 2020. That'll be the 11th straight year, but slow growth. And you, I think it's cute. You say that you're actually really excited about looking for some secular trends to outperform in a slow growth environment, right?
Ultimately, it has been growth that has mattered for almost a decade now. Value has struggled. And how do you find growth that is a little bit faster than this? What 5, 8, 10 years ago I would have talked about the terrible twos, right, which has ultimately turned into the terrific twos, which is we're growing fast enough to create jobs, create wage gains, but not create the underlying inflation that might lead the Federal Reserve to choke that off.
So you've got
how do you outgrow that?
Did you see that?
Disruptive technologies.
Disruptive secular growth trends. The global digital build out.
Yep.
One. So who would Jason put people? What should he put people in?
Ultimately, you start thinking about we're transitioning from 4G to 5G. 5G wireless technologies that allows for tremendous data. That's underpinning how we're going to start talking about autonomous vehicles, how we're going to wind up tracking things. Ultimately, how does that Boeing spaceship autonomously wind up docking with the International Space Station? Can you do that with Rosie the Rocketeer effectively at the controls for your landing, your 3 parachutes, and then ultimately a giant space airbag to cushion your wind-up landing? So how do you actually have that real-time data being transmitted back and forth so you wind up making better, smarter decisions?
All right. So you're not going to give us individual. You don't do that necessarily. So next generation vehicle, who's that? Tesla?
That would be an example of next generation vehicles, but you start seeing more about basically, I can't think of a single major auto company which isn't starting to work towards either more autonomous vehicles or certainly alternative fuel sources.
Autonomous and EV and stuff like that. All right. How about the growing importance of cybersecurity?
We just talked about a breach.
Two breaches today.
2 breaches this morning.
Yeah, the breaches du jour.
Wawa, for God's sake.
Wawa.
I mean, I stopped there on the way down to Washington the other day.
Do you know what Wawa? Do you know what?
I do know what Wawa is.
Did you heard me say that?
I did
buy food at Wawa.
We bought a sandwich. They have lovely sandwiches here. But imagine you go into a stinking convenience store and your data is at risk. I'm sorry,
but I will say
it's terrible.
Back to his point about back to Jack's point about the technology that's in there. You walk into a Wawa and you can order your own sandwich from the kiosk with anything you want on it all the way through.
Do they have those hot dogs?
No, they got good food.
Those are some of those are 8, 9 months old.
I thought you were going to say years.
Huh?
Years.
Yeah, they might be. You know what? So what's a Wawa? You know what a Wawa is?
I don't know what it is.
That's what I just said that.
I was wondering. It's a convenience store.
No, it's not. It's a Canada Goose, dude. It's from the Song of Hiawatha. It's an
That's
Indian.
the history of Wawa.
Right.
That's
what that's what I was asking you.
You are so
earlier.
Sophisticated.
Thank you.
At times.
How about 20% of investment grade debt is a negative yield? So stay away from bonds. They're not going to be any good. But
you're asking an equity portfolio manager if he likes bonds.
Right, but you want real estate, preferred equities, dividend-paying stocks.
You want to move a little bit further down in the capital stack because ultimately I think that's where you wind up getting some returns, whether it's dividends and dividend growth, whether it's moving a little bit further up if we're talking financials in terms of the preferreds, and real estate. I mean, ultimately, real estate has worked out nicely for the last several years.
Okay. Jason, you have a lot more. I just wanted to have you respond to
we have. Listen, I'm all for secular growth stories, but in our firm, we've been telling people to go more cyclical and to go more towards value for the last couple of months, and that's largely because we've seen what we think is a bottom in global growth expectations starting in August. And in a world of negative interest rates, growth does very well. Things with absolutely no yield do well, and things with a lot of yield do well. So you'll pay 25 times earnings for Procter & Gamble, and then you'll pay an infinite amount of earnings for Tesla or whatever it is. I think it's changing next year. So we're telling people, again, financials, we moved to overweight. We've moved energy actually to overweight. So we have a decidedly more cyclical bias. I think those stocks are cheaper, and I think there's more opportunities at this point. In some ways, you have a second leg of the economic expansion, in my opinion.
Jason, do you see this quarter and next quarter? Is this the bottom of the slowdown right now?
This should, well,
you're right. Expectations have bottomed out for next year.
I think so. And you know, Steve, I think in the first quarter, Boeing is definitely going to have an impact on GDP. But I really think trade, in many ways, the trade war between the U.S. and China largely sterilized some of the benefits of the tax cut that we saw at the end of 2017. Now that the fact that the trade war is over, it seems to me global growth will be better. And Europe, in many ways, will probably be one of the bigger beneficiaries because it's so geared towards trade. But the U.S. will benefit, too, from an increase in business confidence.